Are you a professional?
Are you?
That's it, Clark. Show him who's boss.
Oh, we're all in this together.
What's going on, everybody? Welcome back to the Clark Griswold YouTube channel. I am Mr. Clark Griswold. Happy to be here. Thank you guys for joining me. If you are new to the Strat or new to the Griswold YouTube channel, then welcome to you guys. We are about to change the way that you guys trade in the stock market. Okay? If you haven't done so yet, you can go down below, click that subscribe button, and then hit that bell. That's the important part. The bell gives you the notifications for when I send out videos just like this one every single day. Okay, this is a review trade of the top 5 watch lists that I had from today's video for June 21st. Okay, I'm going to go through basically the gap plays. So in addition to that, guys, if you are new to the channel, I've got over 200 learning tools for you guys to go through. Gap videos, review videos, broadening formation videos, how to trade inside bars, the hashtag 30 and 30, how to trade that. The list is very, very extensive. So you can go check out any of the playlists or any of the videos to help you out with the strat. There's a beginner playlist tool as well. You can also follow me on Twitter at Mr. Clark Griswold, okay? You can ask me questions there. If you think they're silly or dumb, ask them anyways, okay? I'm here to help you guys, okay? In saying that, I love doing the videos for you guys, okay? I really enjoy it. But it takes a lot of work. And the other thing, I want to keep this free for you guys. I don't want to have to charge for my time to do this stuff. I want to keep it free for you guys. So the way we can do that is when those little 15 or 30-second ads pop up, please just watch them. And that will let the advertisers pay for you guys to learn. It'll keep the money in your pocket. I don't need to start a Discord or chat room where we're charging people or anything of that nature, okay? I want to keep this stuff all free for you guys. So let's get started on this watch list. Earlier today, before the markets opened, it was in pre-market, I sent out 2 tweets. Okay, the first one was a video of how to play the gaps. I said it's a good day to know how to play the morning gap. Then I sent out another one shortly after. I said, remember, if we open above or below our triggers, our yellow lines that I put on my videos, then we're not chasing the trade. You don't get in the trade. You switch to playing the gap. And it's basically just playing the orb. It's an opening range breakout. You play the first bar. We're going to show you how to do that today. Okay, how to play that opening range breakout, how to play that orb, and where your triggers are, okay? So I sent that out to you guys first thing in the morning before the market even opened to give you guys a heads up. Now, the plays, Neo and Spy weren't on the watch list, but I watch them daily. They both gap, so we're going to start with those 2. Then we're going to go to Lucid, IWM, Starbucks, Roblox, and DraftKings. Okay, and it won't take long. I'll just go through these fairly quickly, okay? And I'm just going to stay on the 15-minute chart with all of them, but all of those plays gapped up. So we'll start with Neo. We'll go to the 15-minute chart. Let me zoom in. And this is fairly simple stuff, guys, okay? There's not a lot to this. Okay, when we have a gap play, we either gap and crap or we gap and go. Meaning we either come back to the downside or continue in the upward trend or downward trend, whichever way we gap, okay? So this was our first 15-minute bar of the day on Neo. And we gapped up. This is on the 15, but there was a gap. So what we do now is we take the tops and the bottom of the wicks, okay, of this 15-minute bar. This is the first 15-minute bar. That's the opening range breakout. The first bar, the opening range, the very first bar that happens in the morning, and it's a 15-minute bar. Okay? So we let this thing open and then close. And once we break above the high or the low of this play, then we can jump into it, okay? So what happened on this play? So there's a couple things. Neo isn't the greatest example, but I wanted to start there anyways, okay? So we break above, and we have this little bit of a run up, okay? And you can use this point here as your reversal point for it to come back down. You can use this second candle after it breaks to the high to come back down, or you can use that original trigger for your stop loss, okay? Stop loss here, here, or here. And depending on your risk management, guys, that's where you would have got out. But you can get in here, and then it comes down. If this was your stop loss, you're out of the trade, okay? And you break even. If this is your stop loss or this is your stop loss, you guys are still in the trade. And I can't tell you how to manage your guys' trades. I can tell you where you can get in and where you should be getting out, okay? So there's a bunch of different possibilities there. Okay, so here, here, or here is where you could have gotten out. If you're out here and you want to play this reversal to the downside, you could have, and then you would have got stopped out again. Okay, but I wouldn't recommend doing that because of the time frame continuity. The hourly, the daily, the weekly, the monthly, and the quarterly were all telling us that this thing was going up. Okay, especially after this first bar. So that's just one more reason to hold on to that trade a little bit longer and make your stop losses not so tight on this one. And then we continue to trend back up, and you could have taken realistically targets in any one of those spots. If we go back to we have to go back quite a ways on Neo, so we haven't been at 22 for a while. But you go back further on this 15-minute chart, and you mark out at the top of the wicks. How far am I going back here? At the top of the wicks, your targets, okay? I gotta wait for this thing to load. So I don't even know if it hit that target. I'm not zooming in on this, but that's how you would do it, guys. You go back in time and you mark out your 15-minute targets on there, okay? So let me skip back here. There might have been one a little bit closer, but again, you have to find those. And even if not, like this, once you break this trigger, this is still really good gains. These are really good gains. You're looking at over 2260 to 23. So it's a 40 to 50 cent gain in this range, and on options, that's really good, really good return on that. Okay, SPY did the same thing. We gapped up. Everything basically gapped up this morning. So this is a better trade. SPY gapped up. This is our first 15-minute bar. Okay. First 15-minute bar, and then we break above the high, or if we would have broke below the low. So this was, once you break above this high, then you're in the trade, okay? And you got 1, 2, 3, 4, 5, 15-minute bars. And again, you can go back in time to mark out your targets. Based on this, we wouldn't have hit any, but in saying that, this, guys, is still really great gains to take, okay? So this would have been really good money off this 15-minute bar. You could have been in the trade for 1, 2, 3, 4, 5. Then we had, if you're looking for stop losses, there was nothing that gave you any reason for a stop loss until you were 1 hour and a half into this trade. And then we broke below here, and you would have been out. Okay? Lucid is up next. LCID. Lucid, first 15-minute bar. Okay, we break to the high. And we go up, and you could have had your stop loss there, and you would have been out. This was a really great gain on Lucid on the 15-minute. Okay? And again, we had the hourly, daily, and weekly all pointing to the upside for this to give us confidence this trade would work out. Okay, IWM is up next. We're flying through these. These are really easy plays, guys. Really simple. Okay, here's the next one. IWM, Russell 2000 ETF. First bar right here. Second bar. We don't break below this, so we're not in the trade. It opened here, came down. The low of this first 15-minute bar is 166.81. The low of the next 15-minute bar is 166.83. If you're looking at where I'm getting that, look at these green numbers right up top here. You can see the O, the H, and the L as I hover over it. Okay, so the low was 166.83. We did not break below. And then we came back up through the range. 1, 2, 3, 4. There's your reversal where you get out of the trade. Okay, really, really good gains there. We go to Starbucks. Starbucks gapped up. Starbucks had this big bar here, okay? And then we came down, and when we gapped down, we hit our first target right here. This wasn't as great of a trade, but we filled that gap on the 15, and you could have taken profits there, and if you had any left on, you could have had stop losses here, or where it reversed to the upside back up. But there was a potential to take profits on Starbucks when it hit this first target here and filled this gap. Okay, Roblox up next, RBLX. Roblox had this big bar to start, first 15-minute bar, and then look what happens. Nowhere in this trade do we get out until right here. So we broke our trigger, the top of the wick, to the upside, and we went 15 minutes, 30 minutes, 45 minutes, came down, no reversal, it was still a 2 up. Then we had an inside bar. Then we went 2, 1, 2 up, okay, continuation. Then we had an inside bar, and we broke, okay. This would have been your stop loss. So you would have gone from 29.46 to 29.75. Again, not as great of a trade as some of the other ones, but still profitable. It's a profitable trade. And guys, that's what we're talking. We're talking about consistency here and small gains and just building that portfolio and building your gains constantly. And those small wins result in bigger wins in the long run over the weeks, over the months, over the years. Okay? If you can win consistently and keep your losses tight, like, there's no reason for you guys to get out anywhere here. If this would have, reversed down to here or whatever it was, then you can get out of the trade, or keep your... Even if you went to your trigger and kept your stop losses, you broke your stop losses. Cyberdog talked about this in one of his tweets, saying if he breaks trigger and comes back through it to the downside, he's out. And if it breaks back through, he'll get back in. You keep those losses that tight, guys, and you eventually those wins, they'll far outweigh those little losses that you have based off of your fees that you have to pay to get in and out of the trade, okay? Your wins will blow those away. Okay, so even if you used your trigger as your stop loss, like let's say Roblox came up through this trigger, up, and it came back down below, okay, and you're out of the trade because it broke back through your trigger, fine. And then if it breaks back through again, get in it again, and then wait. If you have these continuations here, then wait for that reversal, okay? And that's it. So next up is DraftKings DKNG. This is the last one we're going to go through. I wish I would have hopped in on DraftKings. I wasn't really paying attention to it. And then we have one other thing that we can look at on here, which is really, really great. I just noticed. So DraftKings, this was the first 15-minute bar. Second 15-minute bar breaks the high side of the trigger. So we're gapping and going. We gapped up. Here was our original trigger. And you can see we opened up, this yellow line, was our original trigger. And we opened up right here. We came back, pretty much tagged it, and then started trending back up. Okay, and then we had this big green bar, which is a big bullish pattern. And if you guys would have jumped in on this trade, you could have jumped in here. If you missed it, there was this double inside bar, which I really enjoy playing. They don't always work out, but when they do, they do. Okay, so we broke above that inside bar, and we went up for another 45 minutes off of that break. And realistically, if you got this, you should still be in this trade. And this is realistically this reversal is where you would have gotten out. So from 12.32 was your stop from 11.97. So 35 cents. That's another really, really good gain, especially off of like 12 bucks on options. That's a really good play. The other thing you can look at here, and I tell you guys this sometimes, if I'm this far up in a trade, I'll start to follow this 9 EMA. Okay, and as long as we don't close below this, I will stay in this trade. And this is a perfect example on DraftKings where it came up. You could have got your stop loss out there and taken your profit, or you could have rode it out a little bit because you already know you have some profit here. Okay, and just follow this line, and you still would have been in this trade. And then when you get up to here, look, this thing's still going. DraftKings is still going up. It's at 9.3% right now. This is still live trading. We're still trending up. And what did we trend up off of? Was this inside bar. Okay, so you could have taken that inside bar for a really nice win because we are with time frame continuity. And you're saying, Clark, you had an inside bar here. It went down and came back up. What happened? Time frame continuity happened. Okay, we didn't have the hourly, the daily, and the weekly trending to the downside. It's trending to the upside. So with the Strat and myself, we like to trade with the trend. Okay, so when the hourly, the daily, and the weekly are all pointing up green, we can get in that trade. And I don't think DraftKings is going up higher, much more higher than 9.3%. But again, let's look at this real quick. If we would have got in this trade, on that inside bar, you already hit your first target. Okay? 1. That should be yellow. But that's your first target there. Off of the entry here at 12.45, your first target realistically was 12.46. It's a cheap way to do it. And it doesn't really hold true. But this realistically now would be your next target here. And if I had my brokerage open, I would flip through to see. But off of this little inside bar here, guys, this is, even if you got up to here and didn't hit first targets, that's still really, really good gains on that. Okay? Really good gains off of that inside bar. And you're still realistically trending and going up from this original trade here if you follow the 9 EMA. Okay? And then we can just hop down to the 5. We can check the direction on the 5 and see how this thing is trending up. And to me, it looks like it's an uptrend, okay? So we had a 2 down, 2 up reversal, and we were heading back up in this direction on the 5 minute as well. Okay? So that's a video, guys. I hope you guys understand gaps a little more and how to play them. This is the 3rd video I've done on them. This is the first review video I think I've done on them from our watch list, but there are 2 other gap videos that I have on my list. So go check those out. Follow me on Twitter. Subscribe down below. Make sure you're watching those ads. Let's keep this stuff free, guys, and we will see you on the next one. Bye-bye.